Been hearing about this stock all over the news lately. It just had its IPO this past week. That stock, is, of course, is Lyft, and you're wondering if it's a buy. So that's what we're going to be talking about here today. I'll go over some information I found out about the stock and see if it's worth buying or not. As always, don't forget to like, comment, and subscribe. It really helps a smaller channel like this continue to grow and for me to put out more videos. So I'm sure most of you have heard about Lyft before. It operates as a mobile application that matches drivers with passengers who request rides. It's basically like an updated version of taxis back in the day. Very convenient. You can just touch your phone and request a ride to somewhere. A 20% commission is taken from each ride, and the driver takes home 80% for their income. So 20% commission of every ride. I believe Lyft does over 1 million rides a day, which is pretty crazy. And they are getting a piece of that. Lyft was founded in San Francisco, California in 2012. So in a little under 7 years, they have already IPO'd and went public. Some more information about Lyft. They, of course, IPO'd just this past week, which was before Uber, their main competitor, who are planning to IPO later this year. They are valued at a little over $20 billion, which most people would say is a little overpriced. Their revenue in 2018 was $2.2 billion, and they had a net loss of just under $1 billion. So it's not out of the ordinary to see companies that are IPOing after they were initially founded less than a decade ago to be still losing money. But of course, investors will look to hope that they can be profitable in the future. About Lyft, it doesn't have much international presence. Most of its services are within the United States, and just a small amount is in Canada as well. But unlike Uber, it's not across the sea in Europe or Asia or any other country for that matter. So that might limit the amount of growth, but it does have plans to continue to expand, so that is always nice to see as well. IPO, which stands for It's Probably Overpriced. Oh, wait, no, it stands for Initial Public Offering. So every company will have to do this when they first go public and offer their shares to shareholders on the market. So there's some problems that can arise with IPOs. The first is there's artificial valuations caused by hype. So whenever you're looking at a stock, you're trying to find the actual intrinsic value of it. The problem with IPOs is because this is all over the news, everyone's talking about it. This kind of causes there to be an artificial valuation on the overall price, which isn't a true representation of how much the company is actually worth. It also raises money, IPOs, for initial investors, which kind of causes the stock to be overpriced because those initial investors who were there when the company first started, they're trying to get profits, and after the lockup period is over, they want to sell those profits, and that will cause the prices to fall as they usually own a large portion of the company, which will, as I said, cause the prices to fall, which is why there's so much volatility just with IPOs in general. There's also no historical records to go on, and I really don't like that because when I'm thinking about buying a company, I like to look at the long-term run, how a company has performed in the past decade, how they performed through recessions, and for Lyft, there really isn't any of those records that we can go off of. And of course, valuation comes on future earnings rather than present earnings. So, of course, nobody's going to invest in a company that isn't profitable, but they will invest in a company if they feel the future earnings will eventually be profitable and they want a piece of that. But of course, that's always really hard to predict, and you might have to look a lot longer down the line than you might expect. So, some of the cons of Lyft just in general and not IPOs is that they're spending very heavily on marketing. $803 million in 2018. which made up 37% of their total overall revenue, was going straight toward marketing. I know they've been doing a lot of promotions based on you can get a discount if you use this promo code, or we'll give you a free ride up to $6 for being a loyal customer. So that always makes me nervous if they're spending that much of their money just for marketing and they're still not profitable. It really makes me question what their upside and their ceiling could be. And management has even acknowledged that a risk factor is that the company may not be able to achieve or maintain profitability, which I don't know, that just seems like a red flag to me. I want my companies to be profitable, and if management is even admitting that that might be a risk factor, that definitely worries me. And also, there's very few barriers to entry for a ride sharing service like this. I always talk about one of my stocks, Boeing, how there's such a wide or huge barrier to entry into the aerospace industry because it costs billions of dollars to do research and development and to get those planes and contracts. Not anybody could just start up one of those. Not saying a ride sharing service is super easy to do, but it's definitely a lot lower entry point to getting into this type of industry. Lyft even did it itself when it was battling out Uber, and there's a lot of future ride sharing services that are on the horizon here, with GM and Google both planning autonomous taxi cabs even as later this year. And of course, autonomous cars is projected to be the future, and I'm not sure where Lyft is on that certain component. I'm sure they're working on it. And of course, there's also no loyalty. You're not going to choose either Google or Uber or Lyft because you like one of them more than the other. You're going to do whichever one will not hurt your wallet as much. It's not like Apple where you'll only buy Apple products. There's no loyalty when it comes to this type of service. And for that, my conclusion on this is that I will stay away from this company for the time being. It's just not for me. Still think Lyft, just the general business model is good because we'll always need transportation, but there's a lot of red flags, and just with IPOs in general, I want to stay away from them. I know it can potentially be big in the future, but for now, it just doesn't make sense. And who knows, maybe in March 2020, I'll change my mind. And then also with Uber IPOing later this year, that's probably going to cause Lyft's price to fall or drop even more. So again, a lot of volatility. I don't really like that when I invest in companies. I'm not sure what your guys' opinion is. Please let me know in the comments. Don't forget to like, comment, and subscribe, and let me know what you think. Thanks, guys.